How to read an option chain on Robinhood, beginner to advanced. If you've ever opened the options tab on Robinhood and felt like you were staring at a foreign language, calls, puts, strike prices, implied volatility, you're not alone. Today, I'm going to break down exactly how to read an option chain step by step, from total beginner to advanced trader. So by the end, you'll read it like a pro. Part 1. Understanding the basics. First, open Robinhood and go to the stock you want to trade options on. Tap Trade Options, and you'll see two sections, calls and puts. Calls give you the right to buy a stock at a certain price before a certain date. Puts give you the right to sell. At the top, you'll see expiration dates. Shorter expirations usually have cheaper premiums, but less time for your prediction to play out. Longer expirations cost more, but give you breathing room for the trade to work. Part 2. Strike prices and moneyness. Running down the middle, you'll see strike prices. These are the prices at which you can buy or sell the stock if you exercise the option. For calls, a strike price below the current stock price is in the money, ITM. For puts, it's the opposite. A strike above the current stock price is ITM. Robinhood often shades ITM differently so you can spot them instantly. Keep in mind, ITM options cost more because they already carry intrinsic value, while out of the money, OTM options are cheaper but require the stock to move in your favor. Part 3. Bid, ask, and last price. To the right, you'll see three important columns. Bid, the highest price buyers are offering. Ask, the lowest price sellers are willing to take. Last price, the most recent trade. A tight bid-ask spread, say a few cents, means good liquidity and easy execution. A wide spread, sometimes over $1, means lower liquidity, which can eat into profits and make it harder to exit quickly. Part 4. Volume and open interest. Volume is the number of contracts traded today. Open interest is the number of contracts still open from previous days. High numbers in both mean an active market and generally smoother execution. Low numbers could indicate you're trading in an illiquid contract. Be careful, as it may be difficult to sell without taking a hit on price. Part 5. Implied volatility and Greeks. Implied volatility, IV, shows the market's expectation of how much the stock will move. Higher for equals more expensive options, but potentially bigger swings. Lower for equals cheaper premiums, but smaller expected moves. Then, the Greeks. Delta. Sensitivity to stock price changes. A delta of 0.5 means a $1 stock move changes the option price by $0.5. Theta. Time decay, how much value your option loses each day. Gamma, how fast delta changes with the stock price. Vega, sensitivity to changes in IV. Part 6. Calls versus puts strategies. If you're bullish, you might buy calls or sell puts to collect premium. If you're bearish, you might buy puts or sell calls. Beginners often stick to buying calls or puts for simplicity, while advanced traders explore spreads, straddles, and covered calls to balance risk and reward. Part 7. Picking the right contract. Here's a quick checklist. 1. Define your thesis. Bullish, bearish, or neutral. 2. Match the expiration to your timeline. 3. Choose a strike based on your risk appetite. Check liquidity, tight spreads, high volume, and strong open interest. 5. Factor in 4. Buy when low, sell when high. Example, if a stock is at $50 and you're bullish for next month, you might choose a $48 call expiring in 30 days with strong volume and reasonable IV. Reading an option chain on Robinhood isn't just about understanding numbers. It's about seeing the story they tell. Once you can read calls, puts, strike prices, and the key metrics, you'll make more confident, informed trades. If this breakdown helped you, hit that like button, subscribe for more trading tutorials, and drop your questions in the comments. I might feature yours in the next video. Remember, every pro trader began as a beginner. Practice, stay disciplined, and keep learning. Markets reward patience and preparation. Apply these tools smartly and watch your trading confidence grow daily.